Hey guys, back with
Hey.
another edition. Are you going to step on everything I say or just the first thing I say? Back with another edition of What Are Your Thoughts? Here with Michael Batnick as usual. We have all of the biggest topics happening in finance and on Wall Street this week. So happy that you're back with us. Let's get right into it. Duncan, hit the music. I want to start with what I think was a really great post by Ben Carlson called The Biggest Economic Experiment of All Time. Is that how he said it? Or in history? All right. So we're going to get a $1.9 trillion stimulus package, and it's a lot of money. And it's like unprecedented levels of unprecedented. And I just want to read this that Ben wrote and then get your take on it. He says, the Great Depression left an indelible mark on household finances because there was no government backstop. No unemployment insurance, no Social Security, no checks in the mail. So a generation of frugal misers was born. We call them the greatest generation, right? Then he says,
I don't think
we have to worry about that happening this time around. If anything, people are worried about the opposite, a nation of risk takers and speculators. It's too early to draw any concrete conclusions yet, but the total amount of money that's helped get people through the pandemic is staggering. And now there's going to be even more. What is this generation's takeaway from this going to be?
Well, there's so many different parts of this country. So I guess your question is like this generation of speculators, of market participants. Because I was going to go the other way. I just want to talk about this one data point.
Regular people.
So let's talk about that. I think that's more important. Jeff Stein from the Washington Post this morning tweeted, the poorest 20% of Americans are estimated to see 20% boosts in after-tax income.
Yeah.
From all of the stimulus. I mean, that is remarkable. These are people that otherwise would have been absolutely destitute, figuratively, and in some cases, literally starving. And now they are much better off financially than they would have been without the pandemic, which is staggering.
But it's not permanent. So
Right.
What happens when you go to take this away? Can you, politically? Are there enough of these people that don't want it taken away that we start having a UBI debate? Universal basic income, because that's what this feels like.
Yeah, I think that's inevitable. I think that's where this is headed.
All right, I'm thinking about investors too, and I'm just thinking like, is the new thing to get very bullish when there's a pandemic or an emergency, knowing that the Fed, because now you have Janet Yellen at the Treasury. She knows what the Fed is capable of. She sat in the seat. So God forbid we have another emergency of some sort during the Biden presidency, and it's Janet running the Treasury. They'll do this again. We know they will, because they know it works now, and it really, really is working. So that, like, to me, it's almost like if you're an investor, you have to think about the word emergency in a very different way than you used to.
I feel like we've been talking about this, Ben and I, for the past year. Like, is this the new policy response to recessions? Is to just throw the kitchen sink at it, because why not? Now,
once you know you can do it, how do you not do it?
The skeptic would say, well, stability breeds instability. If you know that that's there, that's going to lead to all sorts of risk-taking behavior, which, there's definitely something to that. All right. Were you good?
Yeah. I mean, no. We'll find out if we're good. We'll see. We'll see where this experiment takes us. What do you got?
I realize that all three of my topics are interrelated, so this is going to be a heavy stock market show. Forgive me. That's what we do here. I want to talk about the Nasdaq correction, and we're going to start with a chart from Sentiment Trader, who showed the number of days from an all-time high to a 10% pullback. This is the quickest on record. It's only been 15 days, because that's what we do, right? The stock market just moves way quicker than it used to. So I want to throw this to you. What's more likely? I tweeted this yesterday. What's more likely in 5 years? And I'm using Zoom here specifically, but replace Zoom with any growth stock. I don't want Zoom arguments. So what's more likely in 5 years? I can't believe that Zoom was once a $100 billion company, or I can't believe we got to buy Zoom 50% off its highs because we were scared of higher rates.
I think it's the latter. I have a list of names that some of them I already own. I own them much, much lower, that I'll probably be buying if this gets any worse. And I'm not rooting for it to get worse, but if it does, I'm just going to add. And Zoom's on the list, and PayPal's on the list. But but the thing you said earlier is interesting. You said substitute any growth stock. I completely disagree with that notion. There are certain growth stocks where we'll look back and be like, wait, What were we paying? I think Peloton will be in this group. Wait, why did we think that everyone was going to work out at home forever? I think Zoom is one of the most enormous technology platforms in the world in the 2020s decade, which has just begun. We're 1 year into the 2020s decade. I think this could be the Zoom decade.
One of my favorite charts, Zoom charts, is last year for a brief moment, Zoom was $160 billion market cap and Exxon was 140. Zoom was bigger than Exxon for a second. And we definitely, I think, not we, like everyone flagged that as saying like, hold on, time out. Zoom is worth more than ExxonMobil. So now it's March and we're gonna circle back to this later, but Exxon's 250 and Zoom is 95. That feels a little bit like nature's healing.
There are certain things that we learned over the last year that are just better over the internet and not in person. And one of those things is visiting a doctor. What happens if Zoom announces a telehealth deal with Aetna or some other Cigna, some massive insurance company, and 40% of the doctor's appointments that people used to go to in person are just done online forever because it's unnecessary to see somebody in person from now on? Are people going to be like, no, I love filling out that fucking clipboard. I really want to write my name and social security number 6 times on paper with a pen in a waiting room. I miss that. I want to read Highlights fucking magazine. And if possible, I want my kid to play with a toy that's got germs all over it. Can we please go back to the doctor? It's not going to happen.
Teladoc got nuked. It's 35% off its highs, but it's still up 185% over the last year.
So that's my problem with Zoom. I think my average cost is 70 or something. I bought it in 2019, not expecting a pandemic. It's too early for me to average up, but I will buy that stock if they keep whacking it because they're wrong. And I feel the same way. PayPal is not down enough. It was almost 300 or just above 300 for a second. I think it's 230 or 240 now.
PayPal is in a 20% drawdown. Nothing.
I own that with a 1 handle. I can't buy it yet, but like my jaws are open like the crocodile in Peter Pan, and I'm waiting for these things to fall into my vicinity. But
all right, enough of the humble brag. Next topic.
Well, I'm just saying it's too early. But Mike, I think a lot of these sell-offs in these stocks are not investors making qualitative decisions. I think there's a lot of mechanics at play with growth ETFs being sold and being forced to puke up these names, and value ETFs taking in that money. And I understand it, and it's long overdue, and it's interesting, but I don't think it's permanent. So you're more in the this is a gift than we all lost our minds. I think it will be seen as a gift, but it may get worse before it gets better.
Yep.
I know that's a cop out. That's where I am.
That's okay.
What's your take? What do you think?
We're gonna get to that later. I got more.
All right.
That's only the first dose.
All right. So let's go into non-fungible tokens. I'm excited to announce that I've changed my mind. I had a formative experience.
Credit to you.
I think they're going to be massive. I had a formative experience over the weekend with NBA Top Shot, which I think is so stupid.
What did you do?
But then it forced me to start looking at other versions of NFTs, and I'm actually very bullish now. Our mutual friend Dave had an all-star pack that he hadn't opened yet, so I opened it on his phone.
How much fun was that?
It was the most anticlimactic, boring thing I've ever experienced. I don't understand it.
Well, because you're not really a collector and you're not really a diehard.
That's the point. That's why that alludes. I don't collect shit. I buy things that are fly that I can wear, or I buy experiences, or I buy like a lot of like really nice meals for myself. That's what I like.
Okay,
there are other people.
Yeah, it's fine.
Right. There are other people who. So Dave's a baseball card guy. So it makes perfect sense that version of an NFT would light. His eyes would light up when he sees it. For me, it's like this would be stupid if it were cardboard. It's even stupider if it lives in my email. However, I listened to this guy, J.N. Silva, who is an artist, and he gave a very good description about what this is going to do for artists, selling their stuff and then collecting that ongoing royalty each time it turns over. And I was fascinated by the possibilities, and I can relate to that. And then I saw what Kings of Leon did, so I shared this article with you. Did you read this?
Wait, hang on. What could you relate to?
I could relate to the idea of creating something and then benefiting each time it gets sold rather than only benefiting the first time it gets sold. That made sense to me because you look at all the artists who sell something, and then once it's out of their hands, the value goes up and up and up, and they're just like, hey guys, I'm going to make a new one.
I know this is a weird example, but like the boy bands, how much did NSYNC and Backstreet Boys make relative to the amount of money they grossed?
Oh, well, that's different because they were like under a management company.
All right, but whatever. I'm not a music guy, obviously, but
I shared this article. What did you think of this?
So I love the idea of the golden tickets, and I actually said that's what it was like. That's what it feels like when you're opening up these packs. But Kings of Leon is doing like a literal golden ticket for some of like their more exclusive artwork for their cover. There's only going to be like 18 of them or something.
All right, let me tell you what I think this is. This is for hardcore fans. This is like the new fan club.
Yes.
And fan clubs have existed forever.
It's a way for fans to be closer to their heroes.
Correct. And to have something, the blockchain part of it almost doesn't matter. The blockchain part of it is there to like pull in like the nerds who are early adopters of this stuff, because the first musicians to get involved with crypto were the DJs. And that makes perfect sense. So they're making electronic music. It makes perfect sense. Don't you think
the blockchain still needs a lot of improvement? The amount of energy and dollars being spent to get these things up and running is staggering.
Well, also, when you look at these websites, they look like pieces of shit. Like Nifty Gateway looks like it was made this morning.
Have you bought anything? Have you bought anything on the blockchain, like any NFTs yet?
I'm bidding for something from Deadmau5, who's like a DJ. I've bought all his music. He's incredible. He put out this thing. It's like a video with music attached to it. There's only 50 of them, and the starting bid's very high. It's a silent auction. I doubt I'll get it, but I get why people would want it.
I tried to buy a piece of art. It was $100 just to see what the process was like. It's outrageous. The fees and the process is not smooth at all, which is fine. So, it's still super early, but it's got to get a lot better.
Going back to the music thing to just button this up. So Kings of Leon is like just an okay band. Like they're not amazing. People were like, "Ooh, they're the U2 of the South." They are definitely not.
Would you say they're like Duncan Robinson?
No, I would say they had a couple of big hits like 12 years ago, and they haven't really made anything that anyone's been playing or talking about since. But they have a following, and they're offering 3 versions of an NFT. There's an entry-level version, which is just digital album art. And then there's a second version, which is like the download of the music and the art. And you like get I guess you get a record in the mail, like vinyl. But then the third version is what you were talking about. Front row seats for life. Plus they fill your car up with merch at the gig. Plus they hang out with you before the show, which sounds like a lot. But this is going to be
for artists.
So there's a kid named Josh Katz, whose company is called Yellowheart, who created these tokens using the Ethereum blockchain for Kings of Leon. After that happens, what musician on earth isn't calling this guy and saying, "Yo, build me this thing for my fans"? Because
Metallica.
I bet you Metallica will be relatively early to this. They have a massive following.
They're
all going to do it. Yeah. I agree. And don't be surprised if I'm the idiot buying like Beastie Boys NFTs.
Yeah,
next week.
You're gonna go deep into the music stuff because that's your thing. All right.
So now I get it, and I was wrong.
Okay, there you go. Kudos to you.
Thank you.
I wrote a post last week talking about the stock market is usually right, and
it was good.
What I was saying was like all of the beneficiaries of the pandemic, they all peaked a long time ago, relatively speaking. Costco, Home Depot, Clorox. Remember Clorox was like a momentum stock? Walmart, Amazon, like go down the list. Zoom, they all peaked.
Shopify.
They all peaked either from August to like December. Whereas the ones that were in the epicenter, the cruises, the airlines, they peaked like immediately. They felt like 80%. So this was maybe an unusual experience, but these things peaked and bottomed so far in advance of us having any idea what was about to happen.
Yeah. You know, there's an argument out there. It's a very childish argument that stocks didn't go down enough. and people are now mad that they've recovered all the way. Like I'm in some of these epicenter stocks that are now higher than where they were before the pandemic.
Live
and people
Nation.
like, yeah, and people are like, what? I don't understand. That stock should be 30. They're not being punished adequately for how bad the lockdown is. Are you crazy? Are you nuts? And
some people just want to watch the world burn, Josh.
What they don't understand, I think they missed an opportunity and they're mad. They thought they had more time. They thought there'd be more damage.
Yeah, I don't think you need to be a psychologist to uncover that.
Yeah, so I think what people don't understand is that along with the lockdown, a lot of these companies had an opportunity to refinance their debt at levels that nobody else thought would ever be possible via convertible bond offerings, secondaries, selling stock directly to like sovereign wealth funds around the world. And that is why you could have a company that's an epicenter stock be higher than where it was before the pandemic started. It makes no sense because they're definitely not doing that level of business anytime soon. But that's how the stock market works. So I think the point of your piece, the market's usually right. I would have amended the title. I would have said the market's going to be quicker than you are. So it's not that it's right because it could be wrong the day before. It's that it cuts to the chase faster than investors sometimes have a chance to do.
Well said.
So
I agree with that.
The stock market's not pricing in current conditions. It's pricing in what it thinks will be conditions like next quarter.
Right.
Or 2 quarters from now in some cases.
Which is why it's always confusing, even for us who know, when you see like a horrible jobs report and the market rallies to all-time highs. But that jobs report was already baked in, and that part of the market will never not like wow me.
Remember what I said though back in April, and I basically said this to clients. I probably said it on here, which is that the news will definitely get worse, but its ability to shock us will diminish.
That was
and
right.
that's what you see in those epicenter stocks, cruises, airlines, hotels. The 9th bad news report is not going to be as impactful to the share price as the 5th one was.
That's right.
And the 5th one was lesser than the first one. And if you just keep that in the back of your mind during emergencies, I think you're better off. Okay, I want to go into Clubhouse. So you wrote about being all in on audio. I'm like fascinated by Clubhouse. I'm having a lot of fun with it. I'm doing a couple of things. I'm not 100% sure where I'm going to take those things, but tell me about like how you see yourself using Clubhouse.
I don't think I'm going to be a power user. I could be wrong, but
Meaning
I just
creating a room and hosting a conversation.
Yeah, and or even like just eavesdropping and just being part of it. Like I don't know how much I'm going to use it. Again, I might be wrong. That's just my knee-jerk reaction. But when I saw it, when I experienced it, I was like, oh, I totally get it. It's basically like TV. You open it up, you give a thumb through if there's something you want to watch or listen to, and then you put your phone down and you move on with your life. It's not homework. You don't have to do it. It's optional. But I love the idea of being able to listen to smart people, feeling like you're part of the conversation. The example that I gave with the Top Shot thing was I didn't know who the people were. I guess I saw it on Spaces somehow, and I was like, oh, I'll just see what's going on. And Adam Bain was there. And I was like, oh, cool. Like, it's social proof. If he's here, there must be something to it. There must be something good going on. So I get it. I think it's super cool. Maybe I become a power user. I don't know. But I haven't spent a ton of time in it. But I have opened it up probably once a day just to see who is chatting it up.
The way I think about it is the podcast is like putting out an album, and then the Clubhouse conversation around the same topic is like the live show. Like you'd probably repeat some of the same points. If you do let's say you do a podcast episode on NFTs and then you finish recording it and that goes live and then people want to talk to you about what you said. That's like the concert that you're doing in support of the album. I don't know. That's kind of like
I might use it. I don't know. But I think I totally get it. I think it's going to be big.
Noah Smith, who's really smart, he was saying that Clubhouse is going to eat into a lot of the influence that Twitter has, like meaning take it away. Because first of all, you can use sarcasm on Clubhouse, which is extremely important to coastal elites like me. Second of all, you have the ability to control who's in the conversation. Now, that's a negative and a positive and a negative, but if you're an influencer already, like you don't want trolls there. It's not helpful.
It's a safe space.
it's a safe space. You can kick people out of the room. So I think that's going to be a powerful tool in the arsenal of people who already have a following. And
One thing that I
didn't come into a room.
One thing that I didn't like about one of the clubhouses that I was in is there was like 6 people on the mic, and people started talking over each other.
That's what I wanted to ask you. Like, you see how me and you, like, we're talking, this is, but we're like making eye contact with each other. Like, you have some sense of when I'm about to say something and vice versa. You don't have that on Clubhouse. You're not making eye contact with the other speaker. I feel like these awkward pauses are just going to be the norm, or else it's going to be everybody talking over each other.
Yeah, I mean, that part is semi-problematic, but why hasn't, do you think Spotify's going to buy Clubhouse or build their own?
I don't know. That's a great question because they're supposed to be all in on audio. So I almost feel like they've got to be thinking about at least building something. I don't know if you can buy Clubhouse yet. It's backed by the A16Z guys, right?
Anyway, I love it.
I'm
surprised because my knee-jerk reaction is like, oh, another fucking social media thing.
No, I'm always like that.
Yeah,
but you know what? These things that aren't good, they come and remember Ello? You might be too young to remember this. There was like a 1-month stretch sometime 8 years ago where everybody created an Ello profile, and then it just disappeared. Because
there was another one. I mean, there was a bunch that came and went really quickly. Oh, yeah. Remember Yo?
Remember Snap? There were
literally
people saying,
Yo.
Wait, there were people saying Snapchat was going to be huge for finance. I tried it. I don't get how, and it never happened. So not every community migrates to every, but I feel like this is tailor-made for financial people are going to want to talk on here. So anyway, for financial advisors, I launched a club. It's the first club for financial advisors on Clubhouse. It's called Future Proof Advisors. So if you want to follow it or follow me, anyone can be a follower of the club, but you have to be a financial advisor to be a member. And I'm going to cap it at like 250 members. So if you're an FA, join it now. Hurry up. All right. What do you got?
All right. Last topic. I want to talk about growth and value. And we've been talking a lot about interest rates being the catalyst that has knocked growth stocks from their perch. But I was thinking about this reading Weisenthal's piece this morning. Maybe it's not interest rates. It's the fact that the stock market is seeing a nominal GDP explosion coming. And in a world where growth was scarce, it made a lot of sense to pay whatever, 100 times earnings for Zoom. Like, it just didn't matter because that's where you were finding the explosive growth. But now, if you could buy Caterpillar that's growing at 8, and I'm making this up, if you could buy Caterpillar at 20 times earnings growing 8 or 9%, why do you need to buy something for 100 times sales that's growing a little bit faster? So it's so funny how quickly price changes the narratives for all of us. And I'm wondering, remember that's, like in WandaVision where she lifted her spell for a second and the crowd people were like they came to their senses.
Yeah, in the last episode.
Did we just come to our senses as investors and say, what the fuck were we thinking? Paying?
No. I don't think that's what happened. I really don't. I think the highest correlation with outperforming stock moves is with changes in earnings estimates to the upside. And I think when the $1.9 trillion stimulus bill came to a vote and the 10-year Treasury rate started to rocket higher, all of those things were basically like priming people for this idea of exactly what Joe and you just said, which is that there's another group of companies that's been completely ignored that are going to have massive upward earnings revisions this year. And banks were the most obvious candidates, regional banks and large money center banks, and they exploded. JP Morgan went from 100 to 150 in like 3 weeks. Like, they literally exploded because with rising rates and a faster economic growth situation and another drop of thousands of dollars per household, you had to own them. But the other thing
my point was we were saying that this is all a matter of interest rates, where it might be nominal growth as well. That's part of the equation.
The interest rates matter to the banks because it's how they make money. Throw that out. You're right. It's nominal growth, and it's new stocks that are going to have a reason to be purchased on those growth assumptions because they're going up. Small caps always lead stocks out of recessions. It's We've talked about that a million times. So that part shouldn't surprise people. And then it's not value stocks that are working. It's reopening stocks. So they just happen to be oil companies.
Well,
and they just happen,
here's a good one. Balchunas tweeted this morning, look out. Value ETFs having their best quarter ever in flows. And with 3 weeks to spare. Flows spraying all over too. Large, mid, small, international. Wow. How quickly things change.
It's performance chasing. ETF flows don't start anything. They come in after.
Correct.
People are buying reopened stocks. I think that's the bottom line. Most of the reopened stocks happen to be value stocks. All right, let's go to Duncan for a couple of viewer topics.
Okay, hey guys. First up today, Jonathan.
Big time energy, Duncan.
Yeah, that's that big Brooklyn energy.
My big time energy.
All right, let's go.
Okay. So first up, Jonathan has a question that we see a lot about when to sell after a big gain. He says, I bought Exxon around $35 a share, and the stock price has now reached the point where I originally planned to sell. Should I go ahead and sell it and pay the short-term capital gains, or continue holding for a year before I reduce my position size? I'm not exactly sure of the direction I think the stock will move from here, but oil is not a long-term buy and hold for me.
Well, don't make a sell decision based on taxes. Like, can we start with that? And then the question is, why'd you buy the stock? So if you bought it as a trade because oil is not a long-term hold for you, then I guess figure out where you want to trade out of it. If it's not a long-term investment, don't use taxes. Ask yourself what the reason to buy was. Did you buy it for technicals? And the technicals say to stay in it, then stay in it. And if you bought it for fundamentals because you thought it was 20% undervalued and now the stock is up 40%, well, you got the reason that you came into it. So I don't know. How would you answer that question, Mike?
Well, you won. You bought it for a reason. You bought it for a trade. The trade worked. Congratulations. If you don't want to sell it today because it got there too quickly and taxes, I get it. But here's an idea. Maybe just use a trailing stop. So you say, you know what?
Let the market take you out.
Like, yeah, I feel like I won, but I think it's got more upside. So if you want, make it up 3%. If you want to put a tight leash on it and you could raise it every day, I don't know. But I think that you bought it for a reason. The reason played out. I wouldn't stray too far away from that.
Let's go
turn
next.
it into something that it's not.
Okay, so next up, Hassan writes, hey guys, love the show. I'm 24 years old. Should I stop reading all this Dalio and Bogleheads crap and just go 100% equities? Maybe just a total market fund in my retirement accounts?
If you're asking that question, then yes. I don't think that everybody needs to throw their hands in the air.
Yes,
and just
what?
Hold on. Okay. Yes, but buy a total market fund.
Okay.
I don't think that is the right solution for everybody. Obviously, I'm a hardcore believer in index funds. I think beating the market is extraordinarily difficult. But I still like to play, and I get that side of it too. But if you're already asking that question, like you should buy individual stocks if it is your absolute passion, not as like a side thing. If that is what you love to do, and if you don't love it and you're not committed to it, and you're already at 24 years old questioning whether you should be doing that, then it's probably not your focus, and that's fine. So I think that you could still be involved in the market. You could still have fun in the market owning an index fund.
My 401k is 96% stocks. And the only reason it's not 100% is because like cash comes in and these things pay dividends. I want all the smoke. I want all of it. I hope
that's not what he's asking. That's not what he's asking.
Yes, he is. Because he's young and he's saying, why bother with bonds? Why not just buy the total market?
No.
Why am I reading Ray Dalio? Why am I reading Bogleheads about asset allocation and all this shit? Why don't I just buy stocks?
I think this is an individual stock versus index fund question. It's not a stock bond question. That's how I read it.
Really? Oh,
Duncan, read that question again.
I'm not seeing that at all, dude.
Okay, so the question is, should I stop reading all this Dalio and Boglehead crap and just go 100% equities? Maybe just a total market fund in my retirement accounts?
Yeah, how are you missing this? He's not asking, should I buy into it? He's asking, should I just buy the stock market, period. I'm giving him permission, yeah. But, Hassan, you're going to see that portfolio cut in half someday, and you have to live through that, and you have to keep investing. And if you don't think you'll be able to in advance, don't do it. So that's what I do. And comes down, I keep buying. I don't know what else to tell people. That's my strategy. But I can afford to bear that risk. I'm young. And it sounds like Hassan is too. All right. We love your viewer topics. Make sure you keep those coming. You can send those to askthecompoundshow@gmail.com. And Michael and I have a great time answering those questions or topic. I don't know if they're meant to be questions. We just turn them into questions. But we love getting them. We love answering them. Make sure you go ahead and subscribe to the channel if you haven't already. Smash that like button. You know we love when you do that. Make sure you tell your friends about the compound. We will see you next Tuesday, just like we see you every Tuesday, around 5:30 p.m. for the next edition of What Are Your Thoughts? Thanks, guys.